Welcome to the Trading Lounge and the FX report, and starting with the US dollar index here. Just also another point is that I will add the cable, the pound dollar, later in the week to this day ahead report. Okay. US dollar index here, in a nutshell, we've hit 100 here, and it's a major trading level, and we expected a reaction from that, pulling back to 95, or the wave 4 of one lesser degree here as our target. That's happened because of this spike here. However, yeah, it's fine in a way. So what we're looking for is we're looking at this wave 4 correction here, and once complete, then we'll be looking for 5 waves to the upside to make the first high above the level. So this would be a classic trading levels pattern where we have the arrival, the reaction, the first high above the level, and then the corrective process, and then we look for support again on there, and up we go from that point. So 1 being the strongest number in the market as well, we could expect this market to be swinging across this level here for a reasonable amount of time. Now, back into this particular wave 4 correction here, I don't take a big interest in spikes. However, they're real, they're on the chart, so forth. So we need to sort of acknowledge them. But in one way, we can see that the move from the top down to this low here, we have the spike in there. I'm more interested in tracking the actual move here. To a point. So in a way, so far we have this move down, this move up, and then this move down. So this can be an ABC correction here, and we can move straight up from here. I'm also aware too that wave 4s, like this wave 4 here, became quite sideways and complex here as well. So this is a little bit of a fingerprint of what could occur across here, so we need to be mindful of that. So in that case, we need to be tracking a triangle pattern as well, and we are doing that as well. There's a couple of ways the triangle pattern can unfold, but firstly, in simple terms, if we take this high and we move straight down from here and sort of ignore the spike, then we could call this wave A here, wave B here, and wave C here, and we could be moving up from that point there. And it does appear that we are getting an impulse wave up through here, so we can expect a counter trend here, and then further upside from that point there. So we are on the right track so far of working higher. We have seen markets, opposite pairs like the euro, work lower as well, and other secondary crosses and so forth. But the main point here is wave 4s can get complicated, so working through this whole correction through here is a little bit of a guessing game. What we do need to see is a nice clean break of this D wave high here, or B wave high. That would certainly put us on the right track. Also, the breaking of this trend line too would be significant. But also too, in terms of the levels, the 98 is the first minor level below the 100. It carries a lot of significance as well. And in a way, the market is working with this level, and we have seen an impulse wave to the upside. So we'll see a reaction. We'll look at that closely in a moment. But at the end of the day, if we get support on 98 here, then it's quite a clear indication that we will be going to the upside. And this little move up through here does appear to be impulsive, and in that terms, no overlapping wave structures. So it is a trend within its own right. However, we need to work through the 98 here. So we can look for same again, the arrival to the level, the reaction to the level, the first high above the level, and then the ABC correction, and then looking for support on it. So there's a few more sessions to go before it's sort of really ready to go to the upside. And this is kind of important too if you've got direct crosses with this market and shorting. So support on here, nice tested support on here would open a door for shorting many of the other markets around the world. So in this little move to the upside here. There's a couple of ways to count it, but I think that either way that we look at it, it's pretty much sort of done and dusted here. Now, this 98 here is important, and group 1 above, 10, 20, and 30 is group 1, and group 2 below, which is the 80, 72, and 65, that's important. So we can expect the first swing to play out in this range here, and in one way or another we would be looking for a 3-wave correction here before we see any further upside here. So just be mindful, whatever you're trading in this, is that this here has got a very high probability of occurring. Now, the only way that it will push to the upside and continue, if I've made a mistake, then my mistake would be that we get support on 98.30. If we get a tested support on 98.30, you need to trade, well, if you're trading long in this market, then you need to be trading long from that point, or short in the euro or whatever from that point. So 98.30, the top of group 1, as tested support, would see the trend move higher from that point there. So that's something to look at. It's nice to know when you're wrong and when you're right, and so you can take action. It's not that one's more important than the other as such, but that's it. The euro here, just on the daily chart here, 1 is the strongest number in the market, so we've got 1.1 here, so it's strong, and we can see that it's strong, and it's being tested as resistance, and it's playing out that way there as well. So the main trend here is down, and we've been looking at this being wave 4 here. In fact, that wave 4 can be there. So we do need to see a bit of a breakdown in this market, on this daily chart here. And yeah, well, that's occurring, isn't it? So we can take a closer look in that in this area. But once again, wave 4s here can be sideways and complicated. The fingerprint from, or blueprint, whatever, from this wave 4 here is very simple, an A and a B and a C here. So this is much the same, an A and a B and a C here as well. So yeah, it's not too complicated at this stage, but wave 4s can get complicated. Once it leaves wave 1.1 here, then we'll be looking at this number down here, number 1 here, for a bounce back up into this area through here. So quite a nice distance to travel as such here. You know, you would need to take a bigger picture, and at this stage you'd need to have the stop above the 1.1, so to speak, and just allow this market to travel and build into it, maybe on the weekly, daily, robo, whatever. But in terms of that intraday correction here that we've been working through, in terms of an A wave here, B wave here, and C wave here, we can see that we've got a nice resistance from there, and it's failing at that point. So the next level is really important, which is 1.8. So 8 is the first level, but below 10 or below 1, whichever way you want to look at. So it is significant. So that, as a retested resistance, would open up, if you're not short already, then that 108 as a retested resistance would be quite appealing for a setup. But normally we'd see something like this here, and that's what we want. We want that reference point here on that retest here, because that retest may not fail and go back up. So the clicking through of that reference point here, where that low is there, is a safer trade as a setup to take, so to speak. But drilling in here, if this is all correct, then we would see this. Well, let's just go in and have a little look at this here then. So at this stage here, this move down through here, I suppose there's different ways to count it, but in one regard, there's no overlapping wave structures, so we can call it impulsive. And I would just naturally expect a bounce off number 8 here. That's the most important number, next to number 10 here, say. So the bounce off here could produce a 61.8 retracement level into this supply block here and roll over from that point. Now, we will get resistance. The move up through here should be 5 waves, 3 waves, and 5 waves. Euro can have shallow retracement levels, so it may only come to this little area through here. The trick is to not short it just here, of course, on first weakness that you see. You need to allow it to mature. And as I mentioned, one way of doing this is obviously allowing and monitoring the bounce. And if you can work the 5-3-5 structure out, and we'll do our best to do that for you. But at the end of the day, after we've got some sort of bounce up here off the 1.8, then finding the 1.8 as resistance would be the short trade from that point there. You can also go into the micro levels here as well, so you can be looking at 0772 here for adding as well. Let me just have a look here. Okay, look, I've drawn this out a little bit through here, so well, that's working out well, because that was I was looking at this earlier this morning. That would be 1, 2, 3, 4. We're up to here, so this has come down now for 5. So that's probably the low in place here. So we'll be looking for an A and a B and a C for the A wave here. But an A wave can be 3 waves, or it can be 5 waves. Okay, and I should have really drawn at 5 waves actually, because wave 2 is normally a zigzag. So 5, 3, 5 structure here. Up into this area, and this block of supply really is the important point there, because it's all about the orders, and orders tend to gravitate towards certain places and numbers and whatnot, but that's what we're looking for there. So this would also be a nice setup here too, so at 109, so move through it, come back, retest it. That price point, wherever that low may be, that's the one that you can get your first position on, and then the second position under 108, and the 72, as I've mentioned before, too, as a retested resistance, because that's micro group 2 at that point. Okay, the Australian dollar doing much the same thing as the other markets in regard. So basically yesterday we were looking at 5 waves down here for wave 1, and we were looking for an A wave, a B wave, and a C wave here. Now that can be finished at that point for wave 2, and we can move down, we can move into wave 3. If this is wave 1 here, yeah, then wave 2, once completed, into wave 3. Wave 3 should be longer than wave 1 here. Okay, but at the same time, in shorting this now, looking for a setup, this is the 50 and 61.8 retracement level. So the market really hasn't reached that spot. It came close here, and that might be sufficient, and that's why I've labeled it like that. But we would want to see some evidence of a move down so far. We don't know if this rally's completed yet. So the 76 here as a retested resistance would help that situation, and the reason for that is because from that low to that high there, if this correction, this rally was going to get any bigger, then it would be like this here. It would be the A wave to here, the B wave here. This would be the 76 is the 61.8 retracement level of wave A. So if it moves through the 61.8 and finds the 76 as the resistance, then that would be moving down from that point there, so that would have to find its way there. But while it's above that, it has the capacity to get a bit more complicated. The wave B will be in 3 waves, and then the wave C here would be in 5 waves. So we could get this before we see it come down here further. So be very careful about that. We're in the middle of this thing, but that 76 will be a nice line in the sand to work with from the outset. So for a moment, let's just imagine that we have wave 2 in place here. We have our A and our B and our C here. And yesterday we were looking for, in wave B here from memory, we were looking for another little move down here, I think, and then wave C up here. So we nailed that very well, I thought. Now, this move down through here does appear to be in a 5-wave structure. So a little bit rough. 1, 2, 3, wave 4 complicated, and wave 5 coming down, making a new low or thereabouts. So after 5 waves down here, we should get a 3-wave counter trend pulling back up into, say, 76, 72 sort of area, 76, 80, which is all group 2 in there, isn't it? So we can just put a little line in there as such there. So Yeah, somewhere in there. So we've got this it appears to be 5 waves down, but remember we really want that 76 as the thing there. But if you see a nice 3 waves back up here, and then the market moves back down below this low here, then you can look to build short trades in from there under here with the reference point in place here. And adding through that and building in on that downside there. Okay, so in a nutshell, you have to be under 76 before you short it. But if you want to get in a bit earlier, then you may be able to do it if we can clarify wave 2 here, or you'll need to clarify wave 2. So looking for a 3-wave structure here, which will also be 5, 3, and 5 here, and you'll need to get that on the 5-minute chart, or some smaller time frame there as such. So yeah, in this 15-minute chart here, this is how I was sort of viewing it here in terms of, and I'm not sure about this, but 1, 2, 3, 4 here, and then 1, 2, 3, 4, and 5 for the 5th wave here. So the A wave, the B wave, and the C wave into this. It shouldn't go anywhere past that. If you get support on 76, 72, like a tested support, well, then you need to be long at that stage. Okay. The Euro Australian has fallen out of bed, and it may have destroyed the structure to the upside. I'd always thought that this market, in line with the euro, US dollar, and the rest of it, that this was all just a wave 4 here. But the problem with the wave 4 is that it moved up very high here into the price territory of wave 1, because originally we were looking at this as 1 and 2. All of the 3rd wave here, we were looking for the 4th wave to pull back 38.2%. But when it moved through that, we thought, well, yes, it can be an extended 4th wave. It does happen. It's something that you just got to kind of figure out and work through and all the rest of it. And I think that could still be the case now that it's moved down here. But yeah, we'll get into that. But as it stands, we're still looking that in positive terms, it could be wave 1, wave 2, wave 3 here, and blue wave 4 here coming back, and then blue wave 5. But with the sharp move down here, it's starting to appear that we need to look at this as an A and a B and a C wave here in 5 waves here, and then moving down. So if it was going to move down, we'd be looking for 5 waves down, 3 up and 5 down, and so on. So that's what we need to look at, and we're going to look at now. So this is the situation where we've got wave 4 in play here. So we've got wave 1 and wave 2 here, then 1, 2, 3, 4, and extension in the 5th wave for wave 3 here. And wave 4 pulling back to the wave 4 of 1 lesser degree. Normally when you get the extension in the 5th wave here, you would start looking at the top of the 3rd wave rather than the bottom of the 4th wave here for the retracement for wave 4 here. But I have to say that this move down through here is developing as an impulse wave, and that's what we need to look at, because if and we'll know this in a moment, but if we get 5 waves here, then we'll get a 3-wave counter trend, and then we'll get another 5 down from that point. So it is important what's happening here on the intraday. It will sort the pathway out that we need to take. Now, I've got this labeled here as an A and a B and a C wave, and the reason for that is because we it's just the way it is. So if we're moving a little bit closer here, okay, so I think yesterday we had 5 waves down from the high here in this little structure here. So we knew that we had 5 waves here. We knew that after a correction, we'll get another 5 waves. So we were looking down here somewhere. Obviously, it's fallen out of bed, and it's sort of, well, not destroyed our wave count, but it's certainly opened the door for viewing another. So at this stage, we've got 5 waves down here. We can label that as an A wave, and A, B, and C for the B wave here. And then very clearly we have 1, 2, 3, 4, and 5. So 5 waves would make wave C. But at the same time, I've got wave 3 here. So in a nutshell, if we get a new low below here, then we've got 5 waves below here. So that means that we would need to look at this structure in terms of wave 1, wave 2, 5 waves for 3, wave 4 pulling back roughly to wave 4 of 1 lesser degree, and this wave 4 might get more complicated. And once it's completed, wave 5 here. So if we get this 5-wave structure, which appears to be likely, then from the 141 or thereabouts, or this may extend even down further here, then we would need to look at an A and a B and a C wave here. And this is the interesting one, I think, because once we can nail this down here, then we'll be getting a 3rd wave down, because this 5 waves down here would make it wave 1, back for wave 2, and then we open up into the 3rd wave down. And that, to me, would be interesting, and then that would take us down to probably 135. A target would be 130, of course, but we'd be looking at, well, 140, of course, then 138, 135, and then group 1, 133, 32, and 31. So quite a way down. So the idea is to pretty much, you can short this now, whatever, but just be mindful that from the 140 or somewhere in amongst this, that we'll be looking for a counter trend and then another move down. So it is all becoming quite clear now, which is really good because it gives us that nice shorting opportunity here. The euro yen is in the same boat as the euro US dollar with its correction here. We're looking for wave 5 to come down here. Yeah, but we need a little bit of evidence. So and setup. It's all about the setup, really. So we figured that we had the top in place here as the A either here or to here, the B wave, and then a C wave up to here. Now, we figured that that's the top there and all that's fine, but I didn't want to short it until we've got 130 as a retested resistance, okay? Because you don't have to do anything or have to be anything, but basically it's safer to be on the right side of a certain price, of the closest, largest number. So we want evidence, we want this tested as resistance before we would look at short positions. That way we have an edge on our side at that stage. So with that in mind, this little move up through here as wave C here or 4 here, we have to be mindful that, well, it is an impulse wave, same as the C wave in this case, but if I'm wrong, well, then this could be up for wave 1 and back for wave 2 here to the 50-60% mark, and then moving up through there, do you know? So it is really important. If the market moves through this 61.8%, then we know that, that the wave 4 is right. So what we need to do here is we need to look at this market coming down. There'll be some sort of bounce off that. This will give us a reference point down here somewhere, this reference point here, and that's the one that we can use to be the catalyst, because it's we need that failed retest of 130. We need it to go back up and retest it, fail, and then prove to us that it's weak, and as it's weak, it needs to take out that low. So you put your short position, a point or two, depending on the number below that low, and away you go. So it's like a bit shorting this at the 129. So if just for instance, we had that as our reference point, then we would need that to be shorted through there, a point below that to take that trade. Now, even in this case here, if we got trapped here, let's just say that we did it here, say here, and this spike here took us out through here. As soon as that, if we were short, got caught short here, then as soon as the market moves back above the 129, the price point that you're working with, you need to be out at that point. Okay, so the levels help you with the stops, they help you with the entries. It's just about being on the right side of the closest, largest number, and then it's just about money management from that point. Okay, the pound yen. Now, we're just putting this pattern here in line with the other markets. Okay, so if this is a wave 4 here, then we've got a top in place and we'll be moving lower. Now, once again, with this market, to short this market, to be on the right side of everything, we need the 178 as the retested resistance. So once again, we need that sort of setup that comes down, bounces back up here, moves through, gives us a reference point here, and then we can look to short it if that, just leave the order in there 1 point below here, and then you're away at that point and keep the stop sort of out of the way up through here. And once again, we can be looking at going from 8 down to 5. Alrighty, well, thanks for tuning in. Cheers.